Retirement, not what I've made, but what I hold on to. Everybody's a brain surgeon so far this year as I hear all of these great stories of returns in the market since the first of 2023. And I agree, if you've had at least 20 to 40% returns in just 6 months of this year. But the primary question is, will I be able to hold on to those returns going into the rest of 2023 and an upcoming presidential election? Now, typically and historically, presidential election years in the stock market have averaged less than 5% in returns. And after such major run-ups the first half of 2023, expectations are quite low as valuations are getting out of hand and value investing is getting hard to find. Dave Duley here, bringing you some great information on retirement and wealth management. For 40 years, our firm has worked with hundreds of families on maximizing success and creating wealth, but more importantly, on reducing anxiety in the process. The major downturn will be in real estate, primarily housing over the next 24 to 36 months, which will have a huge impact on the markets. As rates were increased again last week, we're seeing 30-year fixed rates climb above 8% and loans coming to a screeching halt. Refinancing is over at this point. The sheer number of homes coming on the market is growing month over month. People have decided it's now or never to try to capture the crazy prices people were willing to pay when rates were back at 2 and 3%. We're seeing ludicrous pricing continue home sales and houses now sitting on the market for weeks instead of just hours or days. A home purchased just 3 years ago at, let's say, $650,000 is now listed for $1.3 million. If it wasn't true, it'd be laughable. And of course, there's always someone out there to buy it. But those people are few and far between today. So we are seeing each week so-called price reductions, but they too are ridiculous, where they drop the price by $10,000 on that same $1.3 million home just to refresh the listing. What most people don't realize and have a short memory of is back in 2008, during the housing crisis, it took 6 years for the pricing to bottom out, and the rebound didn't begin again until 2014 or 15. So no different here as we anticipate 2025 and 2026 before we see bottom pricing. Patience here is key, and I know it's especially tough for first-time home buyers. Yes, inventory is low, but rapidly growing, and builders are beginning to see the writing on the wall as they're starting to dump inventory and get it off the books. New home buyers are better off renting before getting hung out to dry owning a falling asset. So no different than housing, you need to be covering your investments from major moves in the market. You can only do that holding individual stocks and narrow ETFs. Understanding hedging is critical in the success of any portfolio, especially when contemplating drawing income during a falling market. Using basic options to cover position is just plain smart. Most firms are not equipped to take on this strategy and refuse to do it because of the work involved. At this point, we are carefully watching when to pull the trigger, and we're getting pretty close. The fact we've had such historic run-up over the last 7 months, we're still playing with house money, but we see the writing on the wall and are getting ready to pull the trigger. If you want to get a better understanding of how we protect portfolios in fast-moving markets, shoot us an email and we'll walk you through some simple strategies to accomplish this. These are not protecting principal 100%, but rather placing limits on pullbacks in the market. You insure your home and your cars and your life. Why would you not hedge against major swings in the market? It's not what you make, but what you hold on to that is key. The great thing with this strategy is your upside remains unlimited, so you're not giving up one thing for another. Visit our website and click on the videos tab for more in-depth knowledge on how we accomplish this. If you like the content we provide, then subscribe below or just reach out to us each week. We get great questions concerning all things retirement and investing. Till next time.